Forex Focus brought to you by IG, talking about IG's proprietary data around client sentiment here today. This is a really cool tool that IG has been giving to the public here for a while, and you can find it both on IG's website and also through the great platform there, which similar to the Commitment of Traders report around commodities, this is data around everybody trading in IG's Forex markets. How many are long? How many are short? Is it overwhelmingly one direction? Is it close to 50-50? And the data currently showing real extremes. 78% of traders at IG with positions short US dollar relative to this Japanese yen, a major Forex pair. More than 3 out of 4 traders with dollar yen positions are on the short side of this, as dollar has been, screaming higher against a number of different currencies, in particular Japanese yen. And our data showing that traders are getting on the short side of this. Now, of course, none of this information is indicative of what is going to happen in the future. But it does show you where the market is positioned. The market of traders are, that is, with short US dollar in mind, long Japanese yen in mind, essentially a contrarian approach to this big appreciation in US dollar. And, in a lot of ways, it could make sense if you're looking at these things from the long-term point of view, and you think that, Forex markets, similar to interest rate markets, have long-term mean reversion characteristics, then, climbing more than 700 pips since mid-July, the US dollar here from 138 to now not only above 145, but above 146 as of today. That's going back to July 13th. Then, maybe this dollar will give up some ground. But on the flip side of that, you have to take a look at this move and, take a look at last year's action and how this market got above 145 and then got above 150, and for a day or so flashed like it might get close to 155. And that's real risk that this market can go even higher. Of course, markets theoretically capable of doing anything. But the majority, 78% of traders positioned on the short side of this market, thinking that it is going to revert back to what has historically been a more normal price. But we'll watch this here and see, given this trend, you might think that if the market climbs higher to 147, 148, 150, that sentiment might climb, above 80% potentially on the short side. It's, another angle to take a look at here is the fact that the Bank of Japan has historically been known to intervene on its currency. And the last time the dollar yen exchange rate got above 150 there, they did some intervention. We'll see if, they're more willing to let this currency run a little bit more, or if they will intervene once again, as that 150 level is the historical high here. When it got up there last time, again, real risk that this market can run higher, but it only spent one trading day above that level in October of 2022. And not only the high for the last couple of years here, 150 is the historical high going all the way back to 1990. More than 30 years of data from IG here, showing the historical price high. You could see that in the late 90s there, they got close to 150. And then obviously in 2022, as we just saw, it got above 150 for about a day, in the 90s, got all the way up to close to 160. So again, this market is capable of a lot. Now, what is going on that's pushing this U.S. dollar to its highs, not only against yen, but U.S. dollar also beating up on Australian dollar and Chinese yuan and a handful of other currencies neighboring Japan there. And U.S. dollar has taken a little bit of a fear gauge status recently, an inverse correlation with the stock market, as you have here, the U.S. dollar S&P 500 correlation. And this is correlating to, bearishness or pessimism coming out of, China really leading the way with bearish stock activity. The Chinese stock ETF is now down around 10% year to date, in the same time that the S&P 500 is up more than 10%. And when that fear is escalating, stocks are moving lower. As you see the correlation here in the last couple of years, U.S. dollar has been tending to move higher, feeding off of that fear a little bit. And, here is the U.S. dollar performance across the board over the course of the last month. You see, more than 350 pips higher against the euro, 400 against the pound. As of today, more than 900 pips higher, going back to July 13th against the Japanese yen. And then 500 pips against the Australian dollar. Some really big, approximately month long activity here in the U.S. dollar against all these major currencies. And as you can see, IG clients, the data showing on the short side of that dollar, we'll see if it presses on through to new highs. Still obviously a lot of ground to cover to get the euro back down to parity or get the pound back down to its lows from last year around 105. Or if we do see that reversion to normalcy, it'll be a really interesting next couple of days and weeks for US dollar.